Okay, good evening, everybody. Hope everyone's okay. Hope everyone is good. And welcome to another Tuesday night, I suppose, chewing the fat. What are we going to talk about today? So, we're going to obviously have a little bit of a discussion about the FOMC meeting tomorrow, the pretty much foregone conclusion that we're going to get a rate cut and what that might mean in the short to medium terms. And by that, I mean over the next 3 months, and then, how that may continue out in the months ahead beyond that, should we continue to see rates getting cut, and potentially also what may happen if we don't have any rates cut. Or further rates cuts. So yeah, we're going to jump into that. I've not really bothered with any news. I think tomorrow's event is probably the biggest news event there ultimately is. We'll have a look at Bitcoin price. There wasn't any actual questions that came through the great Q&A, but I did have a bit of a discussion with someone in Discord messaging, which I think is kind of worth going over because it covers 4-year cycles, it covers rate cuts and a few other things. So I think we can try and tie that in. But as always, if you've got any questions, feel free to drop them in the chat and we're going to do some charting. But without any further ado, let's just jump straight into it. And here we are with charts. Bitcoin at the moment actually had a bit of a move up, about $1,000 move up in the last hour or so. Currently sitting just, 116,500, just below that 117,000 support resistance line at the moment. Pretty important level, 117, in terms of sort of point of control, in terms of previous support and resistance. So interesting to see if Bitcoin continues to make that move. And we'll talk about what implications of tomorrow might happen on the markets. But we'll go from there. Bitcoin dominance, I'll just blow that up like that so you can see it. It's currently sitting at 58 and a little bit percent. I'd say we're kind of still ranging, but in that range, trending down at the moment. No real major move or recovery from Bitcoin right now. And it's kind of just a bit of a slow bleed on the way back down. But yeah, I think I posted something in Discord, like effectively 45 out of the top 50 tokens are outperforming Bitcoin at the moment. Sadly, BitTensor isn't one of them, but we can kind of really feel that we are in that alt season, whether it's a mini alt season or the full blown alt season. I'll leave that to you to determine. Total 2, interesting with Total 2. So I put a new line on the chart. I think this one kind of slipped under the radar. I didn't even notice it until today. But that orange line you see at the moment, at 1.17 trillion, that was the previous all-time high ever for the Total 2 market cap. And this is a 3-day time, it was on Saturday, we actually exceeded it. We got to 1.74. So we finally made an all-time high with Total 2, off the back of the fact that Bitcoin dominance is falling, alt season is moving up. Ethereum's kind of been stuck in a rut a little bit itself since its move. So it does feel like we're talking about other larger caps, Solana and the like, making that move on behalf of the altcoin market. But just overall, altcoins looking to perform. It has pulled back since then, sort of coming back down to this $1.66 trillion level, which we can kind of see. And the candle's not closed, so we can't give it too much, but in and around this little peaks that we had there. But nonetheless, something to monitor as we continue through. And then we got BitTensor. Oops, no, we don't. We got BitTensor. I'm all over the place right now. Now we've got BitTensor on the screen. And kind of just sort of trending down still. In the middle of that sort of yellow ranging pattern we're seeing at the moment. For those of you that didn't see in either trading or Avenger chat, I've done a very small sidestep, like 10% on BitTensor. This could be an incredibly short-term play. I got out at 342, so I'm $1 under at the moment. But I just saw those rejections I talked about in the 4-hour time frame, and then actually Bitcoin had that move up, and it kind of moved alts with it. Although BitTensor is kind of sitting at its daily open, but we'll talk about that one a little bit later on. Again, no real strength for me, unfortunately, at the moment with BitTensor. But I'm just, having a bit of a think about whether or not that rejection of all of those EMAs is a precursor to retesting the Gandalf line around about 320. And that's all I'd be looking to do. A very short-term play, ultimately, hopefully, on that one. But yeah, we'll see how that one kind of plays out. In terms of looking at Bitcoin, a bit more zoomed in at the moment, 12-hour time frame right now, and nothing's really happened since last Tuesday. So our last call was It was on the Wednesday. So we hit 114. We're now at 116,000. So, less than a 2% move up, although it has been moving up. And we've moved much closer to this liquidation heat zone of 116,750 to 117,500. It's a relatively newly formed zone, so it's not particularly strong. But interesting at the moment that we've just sort of tapped into that, but we haven't quite cleared it. What I would say is, regardless of what happens tomorrow, Bitcoin closes today in and around this price. The just natural volatility that FOMC day brings, I think we close that. I think we quite clearly will close that one, whether that's whipsaw action or just a progressive move up. We can discuss later on. But given just how close we are to it, I feel that that's probably where we're at. And then, again, now on the 12-hour time frame, you can kind of see that 117,500, just the amount of candle closes left and right that are sort of done in and around that area. So that's why it's such a strong region over the last sort of 2 months. And yeah, significant area of interest. We break above that, then I think, naturally we're going to be talking about this liquidation heat zone here. And I just think the market makers are just probably going to just make a run for that. The psychological level of 120 as well, I think is too good to resist for them. Speaking of sort of like areas of interest and points of control, so I've just run, so for those of you that aren't familiar, this is the fixed range volume profile, and we're just, with the blue and the reds, we're just trying to see where the buying and selling volume of sort of that particular time period is mainly clustered at, and it can kind of give us sort of a value area high, value area low down the bottom, and this green line here is the point of control. Well, we're going back approximately 6 weeks, actually a little bit more, maybe 7 weeks on this, and we can kind of see that the point of control, this green line, is what we've been sort of like resting on as support, and today we've had that strong move up. But don't get too carried away, because actually over the last 5 days we have bounced off this level 3 times, and we have actually always wicked at this value area high, which is just under 117,000, which is what we've kind of been talking about, also tying in with that liquidation zone there. So we need that next move up, that next sort of thing that's going to be able to drive us through. But you can actually see, let me just get this. The reason we're potentially having some issues here, if I can draw it decently, is we do have a decent amount of sort of previous buys and sells in and around that area. So we need to get through it. As I say, tomorrow might be the catalyst for us to be able to do that one. But no surprise that we're seeing some difficulty on relatively low volume prior to that. We'll go into Bitcoin on lower time frames a little bit later on. But what's the main thing that everyone is talking about and been talking about probably for the last 2 weeks? And that is tomorrow, Wednesday the 17th, FOMC, federal fund rate. And then, the one thing that I'm mainly interested in is the press conference afterwards. So we can kind of see 7 o'clock UK time, 2 p.m. Eastern Standard Time. Previously, we're currently sat at 4.5%, and we are forecasted to go down to 4.25. That would be the first rate cut since December of last year. And, the confidence levels that we are going to have that rate cut, 96%, which is pretty much a foregone conclusion. I'll refresh it. It was 96.1 for the last couple of hours. Not that it's really going to make too much of a difference, unless some news has broken. No, 96.1 again. So there's still a 4% chance. I don't think that's realistic, that we might get a 50 basis point cut. But 25 basis points seems like it is on the cards. We've had sort of inklings and rumors and sort of, behind the scenes discussions from Powell and the Fed that this is going to happen. I think that's why everyone is just going on this view. Now that in itself, to me, does at least send off one little alarm bell, buy the rumor, sell the news type event. And I suppose the question that we're all waiting for tomorrow is this initial rate cut already priced in? Gold made an all-time high today, $3,700. NASDAQ and S&P both made all-time highs yesterday. I don't know if they've done so again today, but you can kind of see that there is definitely a lot of excitement in and around the market. And just the sentiment on YouTube videos, the sentiment on crypto Twitter, etc., is that this rate cut is the start of the next move up. And I ultimately can't disagree with that, but I just wonder if tomorrow is going to bring that volatility, just because the market makers like to do what the rest of us aren't thinking, and maybe we see some whipsaw action to move us down. We'll go into that a little bit more detail. Now, if some of you are wondering whether or not you're suffering from deja vu, you are absolutely not. This time last year, to the very day, on the 17th of September, we did this live call, which I deliberately used exactly the same thumbnail because we were talking about the exact same thing. 12 months ago, we were sitting at a federal fund rate of 5.5%. We'd been there for some time, and we suddenly got inklings that we were going to have the rate cuts. And the question on everyone's lips was, what does this mean? Are we going to Valhalla, or is this going to be the start of the downfall? And you know, doesn't take a genius to work out what actually happened. At the time of that call, I think Bitcoin's price was around about 50,000. Between the commencement of rate cuts, between Donald Trump winning the election and the excitement that brought to the market, we managed to get Bitcoin all the way up to about 107,000. So nearly a doubling of that. So I want to kind of explore that a little bit later on, and just see whether history could repeat itself, or actually was there some extenuating circumstances why that happened, and this time may ultimately be different. So as I say, no one actually sent any questions, and I've just summarized a conversation I had with someone on Discord, because I thought it segues in quite nicely to what I wanted to talk about today, whilst also just sort of giving my views on things like 4-year cycle and how we can determine that. So basically they were just saying, look, last week I talked about I'm still a believer in the 4-year cycle, and I will be until we see that it has broken or invalidated itself. They were sort of, the conversation we then had was, how do you know if it's broken, and what am I going to do to try and position myself for both scenarios? So I'm going to try and go over that. And then the talk was, you know, also given that traditional markets are continuing to make all-time highs throughout this year, and the positivity around upcoming rate cuts, what do I think is going to cause, in inverted commas, the crash that will effectively signal the end of that 4-year cycle, whether it be things like recessions or anything like that, or if there was anything else there. And I have talked about that last week, but the person I'm speaking to didn't quite get it. So we'll try and go over that as best as we can again. So, you know, this, I put it on the linear chart, but just whilst we're talking, this is the 4-year cycle as plain as it can be. And, you know, let's just say I've done this chart down very simplistically, because this is not the 4-year halving cycle. I'm not talking about scarcity and stock to flow here. I'm talking about just, you know, almost 3 years up, 1 year down, however you want to look at it, but sort of that general kind of rise out of the red areas, the bear markets, and that progression of, you know, sort of finally clawing our way out, starting to see some life, and then a parabolic year only for it to reset, which it's on the linear chart, so you can't see, but it's drawn out perfectly throughout the history of Bitcoin. And I see no reason why that has necessarily broken. And I get it, because normally in year 3, we see some incredible moves across the board through crypto, which granted we haven't really seen in this final year. And I think what people are sort of assuming is we've not experienced that yet. And because we've not experienced it, things are probably moving to the right. And I'm not here to suggest that isn't going to be the case. What I'm here to suggest is that I've been through a couple of these, and each time there's a new reason as to why the 4-year cycle has broken, and yet an event occurs at, you know, sort of almost the same period of time within that 4th year, as in back end of Q4, that resets the market, and then within 12 months everyone's just like, oh yeah, well, it's a 4-year cycle, it's obviously it was going to end there. And people kind of sort of get away from that idea that no, that time it was broken. So I'm just sort of like playing the safety side of nothing really I've seen right now has led me to believe that the 4-year cycle has already broken, because we haven't really seen a massive sell-off early and a continuation below things like the 50-year MA on the weekly time frame, nor have we, you know, expired in our time, as in we have run past Q4 of 2025, and Bitcoin continuing to make all-time highs. So I think that for me, until it is proven otherwise, this is the more logical way to sort of look at Bitcoin's price action. And for those of you that are, you know, sort of concerned, well, we are stagnant. We're not moving as fast as we have in previous cycles. And therefore, if we are still in that bull run, it's going to move to the right whilst we get that opportunity to see Bitcoin make its next leg up. I just sort of draw your attention to the charts here. Hopefully you can see, you probably can because I've moved it up now. So we've just got Bitcoin here, weekly time frame. But what I've signified in the boxes, so in the yellow boxes are effectively the lowest point of Bitcoin's price in the September of the parabolic run year to the time at which it reached its all-time high. And then we went into a bear market. So we've got 2013, 2017, and we've got two of these instances in 2021, which I'll explain when we get there. But look, 2013, Bitcoin's price was around about, and I appreciate there weren't many other altcoins around there, but we're not bothered about that now. We're just talking about the Bitcoin 4-year cycle. Bitcoin was around about $85, and then within 10 bars or 10 weeks, 70 days, Bitcoin had gone from 85 to 1,070, I believe. No, 1,170. It had gone up by 170,000. So yeah, okay. 1,170. Basically like a 13x in 10 weeks. Now, I'm not expecting that this time around, obviously, but within 10 weeks, you had 13x your move. Incredibly fast movement, and you know, something to obviously get excited about. We fast forward to 2017 when some of us were you know, having our first experience of Bitcoin. We found the bottom at around about just under $3,000, and then within 13 weeks, we had found our top at 20,000, just under $20,000, pretty much a 6x, almost a 7x in price within, again, only 13 weeks. And this was my first experience of, you know, I genuinely believed that the price was not going to stop at 20,000. Probably people talked about a 4-year cycle then, but I don't think I was so new to the market, so caught up with looking at my portfolio, never really bought into it. But lo and behold, look what happened. You then move to 2021, and you've heard me talk about it till the cows come home. Whether or not the cycle top was actually April or it was November, we'll leave it there, but we'll have a look at the evidence for both. So in this instance, looking at the April 2021 high, the move, the preceding September, you know, was at around about 10,000. Now, this did take an awful lot longer. Obviously, this took nearly 30 weeks, 28 weeks or whatever. But we went from September 10,000 to 64,000, again, a 6 and a bit X within that period. Strong move up, then we had that correction. Then we have a look at where we were in the actual peak in November. We go back September, we were down at around about 35,000, and within 8 weeks, we had managed to double it. I mean, I appreciate it's no 16x, it's no 6x, whatever. We still doubled our value within only 2 months of finding that bottom in September. So we can see how much and how quickly this can move, and altcoins can move even faster. So I think the point that I'm trying to make, or tried to make when I was chatting in the DM, was just because we haven't seen that really strong, aggressive final move yet, doesn't mean, and just because we've been ranging this cycle quite a bit, and we've had long periods of ranging, doesn't mean that that is the reason that it's broken. That is the reason the 4-year cycle's open, because we're going to experience another long ranging period and then go up. We may well experience that. I'm not writing that off, but what I'm saying is history has shown us that actually when we're talking about this final year, those sort of last 12 weeks of the cycle, that's where the move happens. We talk about it all the time. 80% of the move happens in the last 20% of the time, and all of that kind of stuff. It really does sometimes feel like that. And I'm not even, so let's just have a look at the last 4 years. Now, I appreciate that we're not talking about the last September in the cycle, but we have experienced 3 Septembers. So we had a September in the bear market. We don't expect much to happen within there. It was close to a turnaround point, and who knows, if FTX hadn't rolled over at the end of September, beginning of October, maybe that would have found our bottom. But Bitcoin, for whatever reason, found opportunity for another leg down. And so there's nothing really to go on there. But since then, we can have a look. And we've got these next moves up. So September 2023 to when we found our sort of top before we sort of started to retrace, 72,000. I didn't put any time frames on this because it's not necessarily important, but we can see that September's, they have been very good for us in making these large moves. And again, we're talking about a 3x, 25,000 to 75,000 in. I should have put a date stamp on this. Let's just see how long it was. In 26 weeks. So, half a year, I suppose, 6 months, we had that move up. We then ranged for 9 months, and then we get to where we found ourselves this time last year, which we'll talk about rate cuts in a moment. But effectively, that first rate cut did happen in September. And then we saw ourselves, again, in the space of 20 weeks, moving from, where were we? Around about 50,000 to that 108,000 that I was talking about there. And so, we've had that strong move. And I suppose the real question is, we're in September at the moment. We're in a parabolic year, so the yellow boxes. But previously, September's have been good for us. We've also got a rate cut. I mean, unless something amazing happens tomorrow, to start off bringing down the interest rate. So could we see another move? And I've just put the 100% move up there. It could obviously be anything. But when people start talking about, I see it difficult getting above 200,000, getting to sort of that 240,000 level. Whilst, I think 200,000 would be a great level for Bitcoin. I'm not trying to overcook anything there. 100x actually does take us to, 100x, Jesus, 100%, a doubling of where we are, 230,000. And we've seen that in 2 months, in 8 weeks, we can get almost 100% move. We've seen in similar times much bigger moves. Now, I appreciate diminishing returns and everything else that's there, but even that 100% move, it's not unheard of that can't happen. And if we are in an alt season, that's just going to mean that altcoins get to fly even faster. But I do, stand that if we do see that move, and we do see altcoins moving with it, it is probably an indication that the market's getting a little bit too overheated, like we see at the end of every 4-year cycle. And maybe ultimately it's going to break. So, as I mentioned, tomorrow probably going to start and signify the rate cuts from the Federal Reserve, and we're going to drop down to 400 to 425 or 4.25%, should I say. Now, I forgot that was what I was going to talk about. And we've kind of already mentioned it, but if we do look back, we've had so what you can see at the moment on the chart is it's just Bitcoin on the daily time frame squeezed in, and then the red is the Federal Reserve rate. So as I mentioned, we had this incredibly long period of us at 5.5%, and then we saw this first drop down, and lo and behold, when did that happen? September. And what does that do? That kind of kick-started this move up, and we had periods of basically going from 5.5 to within 2-3 months or 2 FOMC meetings, getting it down to 4.5%, which, as I said, saw that move up. And this is something that I did talk about last year. So we obviously had this Avenger call, which I talked about last year, but then we also had a cuddle where I was just talking about this interest rates coming down and what that might be ultimately a precursor to. You can find it on Vima if you're that interested, but I did dig out the old slides that we did. And I suppose this is, I will quickly go over what it is, and then perhaps we can talk about why things didn't go the way I thought they were going to do. But ultimately, I was trying to sort of highlight here that, and you've seen me show this chart before, again, we've got the federal rate in purple, we've got United States balance sheet, effectively assets in white, and then we've got the S&P. Just gave me more data here. But ultimately what I was saying was, before we're really going to see the next leg of the rally, we kind of need to have a crash. And what ultimately happens is we start to see sharp, quick drops in interest rates, which lead to a market crash. And even when the money printer turns on, hence by the white line, it doesn't automatically say that that's it, we're going to go to the moon. It takes a little bit of time for that money to kind of circulate around the system before we see it. But once we have a stabilization of interest rates and we have a money printer turned on, it usually signifies strong, prolonged periods of upwards movements within the markets. Okay, so that's effectively what I was ultimately trying to get at. And I was kind of comparing, different things. And what we're talking about here was, it is expected, the first cut, people get excited by that, and we actually see moves up happen, which is what we saw in September 24, and I dare say it's what we're probably going to see tomorrow. We're going to see that exuberance and that excitement of that first cut. But then actually what happens is, as the cuts continue, and depending on the severity of the cuts, the market starts to ultimately roll over. And then you get to a position here where you actually start to see, now we've got federal rate cuts in purple, and then these red lines or red boxes up are effectively recessions. And we can kind of see as rates come down, this is on a linear chart, logarithmic chart, so they don't look as severe. But we can see in 1991, rates came down. We had a recession whilst the rates came down. Early 2000s, the dot-com. So we had a recession as rates had to come back down. Financial crisis. You get in the picture here. Rates came down sharply. We had a recession. 2020, we had to bring interest rates down very sharpish because of what was going on in the world. And we had another mini recession. And so the point I was trying to make in September, and it's still what I believe now, is that if we start seeing strong rate cuts happen, it's very likely that we're going to tie ourselves into a recession, which ultimately is just going to spell trouble for the traditional markets. Now, I'm not here to suggest how long any recession may last. And if you're interested, you can have a look at previous ones on here. I think it's stuff that we've all kind of seen before. But again, you can go through the talk, and I think I'll probably even post this on Discord, and we can go through it all. But what happened last time? Why was it different? Because what we did see is we saw the start of the rate cuts, but then prices just continued to go up. And I think for me, not trying to dig myself out of a hole here or anything, we didn't see that long of rate cuts. We saw 1% cut off over 3 or 4 FOMC meetings, and then we effectively just saw it pause for 9 months. So the 1% rate cut that we had, which was done in 25 and then in a 50 and then a 25, I think, was almost like that first cut excitement going up, as everyone was like, oh yeah, the government's finally doing something, and we're about to get to the point where we get down to zero in interest or close to zero, and they can turn the money printer on. But as the market got excited, and there was obviously other events like Donald Trump's election win, but then what did we do? We just paused again. We didn't do anything. So we didn't have those continued sharp drop off, and we just moved along on what we're now knowing is kind of false economic data, particularly around the jobs and the housing, to suggest that actually the economy wasn't as bad as we thought, and we potentially didn't need the rate cuts. And whether or not you buy into Powell's mandate of 2% or whatever, the data that was coming out was certainly suggesting that employment rates were quite good. Housing, both new homes and secondary homes was strong. And despite, concerns as to, well, how do all these marry up when, conflicting reports coming through month on month, that was the data that we were ultimately fed. And so Powell, stubbornly, whatever, relying on the data that he was given perhaps, was like, well, we don't need to do any further cuts. And that's what I find interesting. I did talk about this last week, so I'll try and do it quickly, was, we had September 24, if you can see it, probably not. The rate cuts started, we were at 2.4%. But during those rate cuts, inflation actually increased. And then when we got to December, January at 3%, we stopped all the rate cuts. Then we saw inflation fall away, and we got down to our actual 12-month low in April of this year, sorry. But we were still in this freeze. We're like, well, wait a second, pal, we're near your 2% mandate. Surely we can start to cut this again. But for whatever reason, he was adamant he wasn't willing to cut it yet. And then we start to see inflation move up. And actually, inflation 2.9%. And now we're talking about a rate cut. Why are we talking about rate cuts when inflation is still going up? You think you'd want to keep on top of it. And for me, I think it was all about the jobs data, if I'm being perfectly honest. The jobs data has been significantly revised over the last 2 months. And I think that has painted a much worse picture for the US economy than what we were led to believe. Over 1.1 million jobs have just been effectively wiped out. Suddenly Powell's like, right, actually we need to act, we need to act quite quickly. And that turnaround does feel relatively sudden. And those sudden movements are what can ultimately cause concern and uneasiness within the market. And, I kind of said this before, but I've lost my stream, just a second. If we are having concerns about the labor market, or if we're seeing that slowing in job growth, slowing in new housing markets, trouble with just generally the financial situation, which, let's face it, debt is increasing more and more. It feels like we have to do something very quickly, and cutting of interest rates, you've got to remember, is sort of a kind of not necessarily a knee-jerk reaction, but it is a sort of a warning bell that there is concerns about the state of the US economy. And with that in mind, what does that do? That makes investors very concerned, and start to think about moving their assets to safer havens. And I don't think there's any surprise that we're seeing gold at an all-time high. Now, it has been going up for a long period, so I accept that, but the argument could be said that we've been in a recession for quite a while, just the data hasn't ultimately backed that up. But we know that gold is a flight to safety for times of recessions. The recessions are still on this chart again. Gold price goes up, gold price goes up. Okay, there's a few where it's ranges, but gold price goes up, gold price goes up. And I imagine very soon we'll have, some of these red boxes, whether it's retrospectively moved back or whatever, and we'll see investors moving towards that flight for safety. And I was watching a video today we've actually shown this chart before, but we're getting a much closer to it now. So this is Moody's, and effectively they're sort of saying, look, whenever you go above, so this is a chart that sort of tries to determine the probability of a recession within the next 12 months. And what they're sort of saying here is when you cross that 50% threshold, it's pretty much a foregone conclusion that the recession is coming. And it doesn't give you an estimation or a direct line as to when that's going to happen, but we kind of know it's within 12 months. And so, we are looking at, sometime within the next 12 months, a potential recession starting, because August was at 48%, near is down 50%. It will likely go higher, obviously. But you can kind of see from the shaded areas that every time we cross that threshold, it leads to a recession. Why am I talking about that? What was it? Because I'm not saying that it's going to happen in the next 3 months, okay? But what I am saying is I do not believe that we're up only forever. That's it. And ultimately, a recession is going to impact the crypto market. Now, people will say that, Bitcoin is a flight to safety, a bit like how gold and other precious metals are, but I'm not sure that is necessarily the case. And I stand by the fact that, yes, the Bitcoin ETFs have been incredibly strong, but you've got to ultimately understand that the people buying this ETFs, these institutions, whatever, they have a responsibility to their shareholders and everybody else to try and draw a profit. They're not going to sit there for 12 months and have a 50% drawdown in Bitcoin when they've already made 3 or 4x from where it is. They're going to have to sell at some point if we find that we're in a recession. They are investors at the end of the day. Those investors are going to get scared, or maybe not scared, but just decide that now is the time to take some profit. And we're going to see it sell. And I still stand by the fact that Bitcoin's main growth over the last 20 months has been the ETFs. It's no surprise that when the ETFs launched in January of 2024, Bitcoin's price at 40,000, and now we're set at 125 all-time high. Well, I know we're not today, but we hit it recently. So if we start to see those big selling off, Bitcoin's going to have that experience. And I don't know if that's going to happen within the next 3 months, and that's going to be the trigger that's like, oh, we look back a year, 12 months later and go, that was it, we were in that recession or whatever. But it may come that way. So that's sort of like how I'm viewing it. I do see tomorrow's interest rate cut. I think that will be met positively, but market maker theory and everything else, I feel that we might be setting ourselves up for a trap, whether that is a snap pullback before we have one final pushback up, or it's a prolonged move upwards, but ultimately just misguiding us towards the inevitable R word and then sort of just panic across markets, including the crypto sphere. Unfortunately, we'll have to wait and see on that one there. But that's kind of where I sit with it. So a few things here. Cheers, Ditz has said, I have some dry powder, but I'm so hesitant to deploy. My faith in the market is low. I do think there is a move up, and I think, you know, I was going to say don't fight the Fed, but that's not the right term. But you know what I mean? Sort of like, don't necessarily shield the market just because we talk about a recession on the cards. And what do I mean by this? Because for those of you that are around in 2023, let's just get rid of these. You know, 2023, and this is the S&P here, 2023, 2024, this rally here was just hated because everybody thought we were going to have a pullback and a recession at some stage, and it just defied everyone. It just kept on going and going and going. And, you know, it took a long time for people to just accept that actually the market's moving up. And I would just sort of argue that, you know, appreciate you got some dry powder and it's all about balancing your risks, but just because interest rates go up tomorrow doesn't mean that this is going to happen now. You know, it is more likely that we'll have a move up, and we'll have that move up for two reasons, in my opinion. One, hysteria. And again, I draw parallels to 1929, you know, in the Great Depression and everything else. So much of what's gone on in sort of like this past 5 years, maybe even last decade, very similar to the Roaring Twenties. But anyway, we'll leave that there. You know, greed, shall we say, is certainly a factor to move it up. But the other factor from a market maker point of view is these people are wanting to offload. They don't want to offload when it's moving down, so they're going to help create this narrative of let's go up as they start selling into it rising. And then when retail have, you know, got enough of their bags of shit, we'll see that move back down. And I'm not here to say how far I think it's going to go, but we will experience it'll be sharp. You know, even this one here in April, that was a big correction, and you know, we're at 6,600 on the S&P at the moment. Even to take to the bottom of that correction is basically losing 33% of the market. And again, if you look at this chart here, you know, 18%, 41%. So that one was a bit more. 16, not much. 4%, nothing. 38% and 50%. So, you know, 33% is a big amount for that to ultimately correct. And I don't know why it doesn't have the COVID-19 one here, but that one there, according to this chart, is at 35%. So even just taking us to the bottom of the tariffs, 33% correction is going to be a very big correction to do that. But as with the 4-year cycle, you know, I believe that's going to happen. It's going to either start at the very end of 2025, maybe it occurs sometime in 2026, but until the 4-year cycle thing is broken, I'm going to stick with that. And then we will find that bottom sometime within 12 months after that, like we do with every other 4-year cycle. It'll be when people least expect it and think it to be going further and falling harder. And then the market will just ultimately turn itself around. I mean, you don't have to be a rocket scientist to suggest that there's some compression here. And just look how tight these bars are getting now. You know, it feels like there's going to have to be some sort of explosion. Now, again, to reiterate what I just said, don't just automatically think it's happened. Wait for the move to happen for you to confirm it. It doesn't necessarily answer what to do with a little bit of spare powder on the side. But, you know, it's just an unfortunate time to potentially find that spare dry powder right at the potential end of a 4-year move across the markets there. Bijan's put Russell at all-time highs, S&P at all-time highs, Tal sitting at your 340, Tal's at 700, Russell's at 2,000 point, Russell now at 2,400 point, and Tal's at 330. So I mentioned this in Discord that I wonder if the this is totally off topic, I know, but I just wonder if the introduction of detail, which was here, I think it was the 14th, wasn't it? There. It's not a very thick line, I appreciate. sort of spelled the end because, okay, we had a quick rally up into it, the excitement from it, but since then we've never made a high. We've always continued with lower highs. I know the lower highs started before then, but I just wonder if D Towers just in some way kind of just held a BitTensor's ability to move back. I don't know the answer to that one. It was just a thought I had. And then B John's put, no alt in history of crypto has bled into the muscle and has ever lived to tell the tale. Okay, well that's ominous, but yeah, okay. Right, where was I on my moving along this? Oh yeah, okay. So how do we know if it'll be broken and what can we do in both scenarios? Well, let's start with the simple one. The Bitcoin cycle, the 4-year cycle is broken. That's actually kind of easy to deal with because as with, if the 4-year cycle is true, we're going to wait for trigger events before we get out. We're not basing it on 1st of December, we got to go, guys. It's more TA-led analysis on that, which we'll go over in a moment. So if we get to the 31st of December and we're continuing to make all-time highs and we're continuing to build on those, then we shouldn't have left the market because there was no indication for us to leave beforehand, because we shouldn't have lost any of our significant TA levels to suggest that it was time to ultimately get out. And even if you had started to just phase out, you always want to leave a little bit in no matter what you think, just in case you're wrong. And so if the 4-year cycle break, there's not really much that I can do. I will obviously have to revisit it. And I do give, I think you have to, I don't think we can just be as aggressive as it's this line and bust. I think we have to accept that there might be a little bit of nuance and maybe we move across. That actually looks like 4 months because I didn't realize what time frame we're on, but maybe we just see a little bit within there. But I certainly will, by 1st of January 2026, if we start to see continued highs, I will start to be questioning it. I'll be waiting to see whether or not we have some sort of reaction down, but ultimately I'll be questioning. Okay, in terms of how do we know if the 4-year cycle is intact and how can we get out? Well, there's a couple of ways. And again, I gave another talk at a cuddle about this, and it's, using on-chain metrics. So this on CoinGlass, and for the eagle-eyed members, it's the first time I've ever seen it. Normally it says hold 100%. We're actually at hold 97% because one of these, alt season indicator, has actually ticked green. So this does seem to sort of slowly move into that zone there. So it's definitely something to follow. And you can track some of these as best as you want. There is sort of a progress bar here. And so the next one, really, we got an 87% on the Bitcoin trend indicator. We shouldn't have a chart, so God knows what that actually is. We've got 86% on the golden ratio multiplier, which we're going to have a look at in a moment anyway. But you can start to sort of have a look at this and say, well, okay, we're getting close to perceived all-time high region, as in sort of sometime in Q4. And now a lot of these are starting to go green. And don't forget, many of them won't go green on the day of the all-time high. It might be a bit of a lag afterwards. So yes, you're accepting that you've already missed part of any move, but when some of these start to hit, then you can start to think, okay, well, on-chain's working, and so maybe it's time to ultimately get out. We'll have a look at these in some more detail, but I also will go back to my canary in the coal mine, and we got close to this, remember, 3 weeks of red. I think we got down to one last day of BlackRock, back in the April dip. It was 14 out of 15 days were red, and then one went black. But again, if we start to see significant sustained selling, then yeah, that's definitely an indicator. As I say, this is the back end of a Google sheet I did for one of the presentations I gave, which kind of lists all of the indicators you can have a look at. So we'll just click on a few. So what have we got here? We've got the 2-year moving average multiplier. So again, what we're kind of saying is anytime we get above this red line in price action, we might want to consider that the market's getting overheated. Again, not going to tell us where we are, and we're quite significantly off that at the moment. I mean, this does have it at, the 2-year moving average times 5, which is the red line, is at 370,000. So, never say never, but that is a big move. I'll accept that. Let's have a look at some of the other ones. Terminal price. I'm not going to click on them all. So again, using this red line, if we sort of touch it or get over it, it's usually quite high. At the moment, that would stand at 250,000. So sort of something to consider there. Again, this spreadsheet with all the links is in Discord. Pi cycle, which a lot of people end up talking about. So we've got the 350 moving average and the 110-day moving average. And what we're looking for is when they cross. It doesn't mean that's going to say when the price is, but on all previous crossings, it has hit the market top plus or minus 3 days. We've got quite a bit of time, it looks like that's quite a bit of space, but actually, similar kind of time frame, we do see those spaces that they can get closed quite quickly. It's just the speed that the 110-day moving average moves against the 365-day. But that being said, we have ranged a lot. And even in the last 2 months, we've kind of been in a bit of a range. So you can understand where that's lagging. We would need to see some significant price movement for that to sort of start to catch up. Any others that are particularly of interest? We're going to do the golden ratio. Okay. A little bit of a finger in the air with the golden ratio, because once it loads, if it wants to load, let's try and refresh it. Okay. Because this golden ratio, it's sort of a diminishing returns in terms of it was hitting previous lines each time. So when the 2021, the first cycle hit this dotted line, which is now gone. It would probably be the 0.3. And then in the second element, it hit the green, which is the 1.6. Am I right there? Yeah. What we're having at the moment is this battle between the green and the red. We've actually already hit the red, and it was a cycle top, although it did make it all the way back down to the orange. But it's sort of like as a potentially a false reading there, and I think that's why I scored it so low on this. If you follow the sequence, it's every time, but it's reducing each cycle. Okay, that's a note of it, isn't it? But we are looking for it to effectively hit the red, because that's the one that will signify it. So that would be at just under 200,000 at the moment. And as you can see, we're halfway between the orange and the green. I could have zoomed in on these. Apologies, I should have done. I don't really like looking using Bitcoin Magazine Pro because it's not the most user friendly. But you kind of get the point of sort of we can use on-chain data. Or this is me. I was just going to go back and just show you some of these other ones, but I think you kind of get the point. So we've got the investor tool, which again, hitting or above the red line is significant. And this one at the moment is at 400,000. It's a bit too high, that one there. Golden ratio, we kind of talked about it here. So we've already hit the green, but we're waiting for it to sort of hit the red, which it hasn't done. That's, as I say, it was at 192,000, 193. And the Pi cycle we talked about. We'll leave those there. I'm not going to bother running through those, because we can just go with the old classic, the one that I've probably talked about for 4 years. Once we break and close below the 50 EMA and sustain that for a couple of candles, we know that the cycle is probably over. And at the moment, that's actually, it's only, it's actually quite high. It's 98,500. So we're only talking about sort of $16,000, $17,000 away. Some of these candles, they can move into that quite quickly. So, but for anyone that was lucky enough to get in quite low down, you're still looking at probably a 4 or 5x getting out at 100, just under 100,000. And obviously this line's going to continue to go up for a couple of weeks. But that is, for me, is, canary in the coal mine plus this one. So this plus this, and then let's not forget, we can always just scour crypto Twitter and just find some random person like me and what their thought and beliefs are. But we're in an active community in which we will just share ideas and thoughts on where we think the cycle is, and so we can use that as a bit of a barometer and an indicator ultimately in how that goes, and that's sort of where I see it. Was there anything else in that question? There was a second part here. So rate cuts, I did talk about that bit there. Just to reiterate on ultimately the rate cuts question, comment. Where's the one with the rate cuts? I've lost it. Doesn't matter. Okay. I wouldn't say that I was 100% certain 12 months ago when it was going to happen, but I did think it was fairly likely. So things to just sort of make sure that I don't catch myself out this time. If we have slow, steady, well-announced rate cuts, 0.25 every couple of months or whatever, and we just sort of slowly bring that down, that's probably generally good for the economy in terms of it looks like it's been managed in a controlled manner. If we start getting swathes and cuts repeated months of it happening because they're trying to bring this down as quickly as possible. We know Trump wants to bring it down as quick as he can. That's where I think we're going to trigger that level of uncertainty, which ultimately would lead to that recession. But I do think, looking at the data and sort of just where a lot of experts seem to think we are, that a recession is due. The question of how long that recession lasts for, I don't know. But that recession will spark a reset. And then from that reset, we can find a low, which we can then look to try and build from again. And that's a very big picture view of how it is. And it seems simple, doesn't it? Just wait for someone to say the R word, wait a few months and then get back in. But ultimately, that's kind of where we're at the moment. We're towards the end of our cycle right now. And I'm already thinking about how to position myself out of this cycle and into the next one. So yeah. And hey, allow me to go first, because I will probably get it horribly wrong and you guys can ride everything else up. So, right, I think we kind of talked about it enough about that. We've been rattling on for 50 minutes. Let's just get into some TA, which is going to be pretty hard to do given tomorrow. And then we'll see where we're at. But, I mean, even just looking at Bitcoin's price on the daily time frame, positive action, just feeding off on what I said from Friday, cleared that 50 EMA. We're now using that 10, the right side of the 50 EMA. The 20 just peaked to the right side of the 50 EMA. And we've been able to bounce from that. We are coming into that strong resistance zone. So we need something to spark us through. We have moved. I mean, we haven't had a vector candle since the 25th of August on the daily. So it's been fairly regular volume. Tomorrow may well see a good volume candle take us through there. And again, not looking at liquidation, but even just looking at vector zones, we then have a chance for all-time high. And what I would say is, we get that rate cut tomorrow, and just regardless of whether long-term, medium-term, it's positive or negative, let's forget that. And the excitement moves the markets north. We really need to be challenging that all-time high to just sort of prove that there's still legs within this market to go. So that's what I'd be wanting to see. I'm not saying tomorrow it has to hit 125,000, but tomorrow needs to be the start or the continuation, should we really say, of that move up. And then, maybe we can start to say that this low on the 1st of September, going back a couple of weeks cool down, was the low before we see that move up. And before you know it, we're going to be in October talking about the Halloween rally and everything. But yeah, daily time frame, I think that's kind of looking very positive. 4-hour time frame, again, a still positive move. We are at a level which we have rejected from before, both on Friday, but also if we go all the way back to end of August, we had that move. But different kind of scenario right now in terms of where we were end of August, just because of the EMAs. EMAs have fanned out in the right direction at the moment, and we've been able to build some support from that, even using the 50 EMAs generally support as we've been climbing out. So positive to see there. I'm not going to do too much more on Bitcoin. I just think tomorrow could just ruin everything just in volatility alone. BitTensor, okay, so here we are. We've kind of had that move down. I mean, we're pretty much up where we opened. I think we opened at 340, so it's 344. But it is looking like a fairly good candle, I suppose. But my problem is we're in a downtrend, so I'm not really going to put too much credence on the low test like this one just yet. I think we need to see days worth of building up from this, clearing these, clearing the 200. There's just all of those obstacles still in our way, which I've talked about for weeks on weeks now. And right now it does feel like it is just a correction down. I talked about this over the weekend. I wanted to get out, and I used the 4-hour in the end today, and the view was wanted to see if it rejected off this confluence of EMAs. We had the 200, the 50, pretty much the 10 and the 20, and we have. I got out at like 442, so as I say, I'm slightly underwater at the moment. It's not exactly moved far, and I might look to change my mind on that, but I still feel that we're just in some sort of downward kind of trend. I don't know if this is going to connect. Maybe not. Some sort of level there. Maybe you could do it with the wicks a bit better. Have to see how the next two candles go, I suppose. But you could also argue that there is some sort of bottom that's formed here. And if that is the case, what we might actually see tomorrow is this filling that and then FOMC taking us that way. So I'm conscious that, I've given BitTensor price action a bit of a bashing over the last few months, and I don't want that to sort of cloud any judgment I may have on where it's going, which is why I've done such a small sidestep. I did it because I talked about it and I just wanted to be part of it, but I'm kind of also in the mind that I think euphoria tomorrow may at least take us high. And I tell you, if everything moves but bit tensor, then I think we've got to have a real question with ourselves about that. But that'll be for ultimately another time there. Ethereum, and this is what I talk about with Ethereum. You know, since making its all-time high, again, it's just ranged, but it's not really done much. It's given Bitcoin dominance an opportunity to sort of climb back through here. So of course it does that. So yeah, I'm hoping for a bit more from Ethereum. Maybe we have to come down. I'm on the 4 hour side. Let's go daily first. Maybe we do need to actually come down and retest this 50 EMA. I mean, hell, I've only been talking about it for the last $600. I think 600 is kind of where I was looking it was going to come back to. So if you think about that, that's pretty much beginning of August. And we've not managed it yet. We are still holding on the 10 and the 20 on the daily. So yeah, you can say we're doing all right. There will be some in the world that say, oh, is this not little head and shoulders here? And maybe it is, kind of a wide neck there. But as long as we hold this 50 EMA at 4,200, I think we're in a very positive position. And yeah, I'll still stand by that. Interestingly, look, you know, the day where we used Ethereum, well, Ethereum had a green vector candle, we put a new all-time high on total 2. It's then sort of corrected back down from it, but it wasn't even as high as Ethereum's gone. So it is other altcoins that have led that way. Solana, looking good. It is. I really hope it comes down here because I'm going to have a play on it if it does. I don't want to do it just yet. I just feel we have had a vector candle, at least we're recovering it now, but I just feel this move still feels quite extended. And I retested at least the 20, but hopefully down to the 50. And then I'll try and make some move from that one. But it has been a strong move. And you know, showing there's a little bit of life in this dog, which I talked about on Friday, so I won't go over it again. Bitcoin dominance now on the daily. So now that we've got some EMAs here, we can kind of see crashed all the way down to the 800, bounced back on it, and we're having a little bit of trouble right now with the 20 EMA. But if Bitcoin continues to make its move and Ethereum stalls, maybe we do see that sort of retest of sort of 59.5 at the 50 EMA there. There are some vectors to clear out, and there's not, you know, you look back in time, not many vectors stay. So, you know, could well have a look at trying to clear some of these out here. But I would ultimately say we're still in that downtrend. So until Bitcoin actually breaks, oops, what have I done there? Actually breaks its trend, and to break its trend, what do we really? Well, I mean, let's just take 59 to start off with, but really breaking this 50 EMA, I'm going to suggest that that's probably the way that it's ultimately going. Bitcoin dominant, stablecoin dominance sort of moving down. It's kind of what you want to see, obviously, in terms of it's moving. Well, unless it's moving off an exchange, but generally this sort of means that we're going off the sidelines and back into crypto. So yeah, bottom around about 4%, although, you know, we have seen it down as low as 3.75. And that's what we really want to see. That move from 4.3 to 3.75, that's what's going to feel like the alt season that we remember from November of last year. But again, you know, still a bit of work to unfortunately get down there. Anything else really to get excited about? Not really. I think that's probably it. I think we'll leave it there. It's been an hour. What I would just say is, for those of you who have any trades open or are thinking about doing a trade, just bear in mind tomorrow, 7 p.m, FOMC, we are expecting 25 basis point cut, okay? You have to be living under a rock to not know that news. That's what worries me, and so I won't be really trading. I know I'm kind of in a sidestep, but I won't be actively trading in and around that. But what we want is if Powell does give us that cut when he talks, and you know he's going to get asked questions, how many more cuts do we see? Does he change his narrative from it's no longer 2% driven? The data is showing that we need to take action. And is he dovish in his talks, or is he really concerned about the state of the economy and, you know, starting to signal we may need heavier cuts at a quicker time frame? That will worry the markets, I think. So the conference usually lasts for about 40 minutes, about 5 minutes of him waffling, and then 35 minutes of questions. So that's from 7:30 UK time. I think that's where you get the actions. That's why we normally have the volatility. 7 o'clock is announced, price moves, and then if you watch it on the lower time frames, every question, you just see the price ultimately moving. But we'll take it from there. I believe there is a cuddle not a cuddle. There is a trading pub on Thursday. For those that keep on asking me, Lewis is getting around to sending out the videos from the cuddle. My one on the Bitcoin retirement plan hasn't come out yet. I think he's just doing them in order, and I was quite late in the afternoon. But it will be out shortly, I promise you. And if for whatever reason the tape's lost, I'll redo it if I have to. But yeah, so when that lands, if anyone's got any questions about it, feel free to hit me up. Any other questions, feel free to tag me, message me, whatever it is. And all I'll say is enjoy the rest of your evening, enjoy the rest of your week, and I'll see you all on Thursday. And failing that, see you on Friday. Cheers now.